Hi, we're doing Mortgage Minutes with MK and Lisa. I'm Mary Kay Beckman with Keller Williams Realty.
And I'm Lisa Billings with Keller Home Loans.
So today's topic is current interest rates. And I get the question on a daily basis, Mary Kay, what is the interest rate today? And I'm like, oh, I gotta call my lender because it changes every day.
Right, so here's my answer to that question. There is not a one interest rate that everybody qualifies for, right? There's kind of a baseline interest rate that is the average out there for lenders and borrowers, but it's gonna vary depending on each individual situation. So some of the factors that are gonna impact the interest rate that a borrower might qualify for are going to be their credit score. That's going to drive your interest rate. How much money are they putting down? Yes. So what is their loan to value? What size loan are they getting? That can definitely drive interest rates. Also, property type. Condos tend to have a slightly higher interest rate than single family homes, and not everybody knows that. Also, occupancy, right? Are you living in the home? Are you renting the home? Are you using it as a second home? Those are all reasons that you might see a variance in your interest rate. So answering the question of what's today's interest rate, I'm going to come back with 10 questions. You know, what's the credit score? What's the loan size? What's it? And that can give you an accurate number. Now, if you're looking for just a general idea or a range on, you know, what's the average interest rate or where are rates trending, we can certainly, you know, talk about that. If you watch the market at all, you might kind of realize lately it's been a very volatile situation. So interest rates are set through the bond market. So not a lot of people realize like where the interest rate kind of numbers come from. I like to think of it as what's typically been the case is when the economy is doing well. So when people are employed, right? The unemployment rate is low. When people are employed and people are spending money and people are doing well in the stock market, we're going to see interest rates typically higher because everything's it's a balancing act, right? So people are doing well, everything's going great in the economy, interest rates are going to be a little bit higher. When we start to see that shift and we start to see unemployment numbers go up and we start to see the stock market not do, then we're going to start to see interest rates starting to trend down to try to stimulate the economy, try to get more buying power. So it's a little bit of a tricky game to follow, especially lately. So I just tell people, don't focus so much on the interest rate as the payment, because really that's going to be your number, right? When you're buying a house, what's my monthly payment going to be? You're not really going to think about the interest rate every day. You're going to be once a month writing a check or making your payment for your mortgage. What's that number? And then we can talk about how to achieve that. So the interest rate game, I wish I could tell you I knew what was going to happen, but I would say for the most part, focus on what that monthly payment. Yeah.
And that's what I always tell people when they ask. I say, listen, your lender can approve you for a much higher amount than what you want to pay. I said, what do you want to sleep with? What do you want your payment to be every night when you go to bed? And that's what you need to focus on with the lender. If they say you can pre-qualify for $500,000, but you only want to sleep with $400,000, then that's what we need to be shopping for. Yep. This was a topic that comes up often, and we would love for you to share it with others. If you learned something, please comment below. If you want to know about something else, please comment below, and we'll be happy to share it with you. Thanks for watching.